So guys, as we go through the market update, we'll go through what's happening here in Texas. So I'll do the roll up first. So these are all of the October data numbers. So the average price in Texas last month was up 8% year over year. The average price was $406,000. Closed sales were down in all of Texas. They were down 22%. So if you more than double and almost triple or 2.5 times your interest rate, right, you are going to see housing sales decline. But because our inventory is still very low, so last year we were at a 1.6 month supply of inventory. Right now we are at closer to a 3-month supply of inventory. That's why we're still seeing that average price up. Now, I mentioned this inventory situation. They say that market equilibrium, where it's not a buyer's market, it's not a seller's market, is in our 40-year average here in Texas, is closer to a 6 to 6.5 month supply of inventory. So even though inventory is increasing in some markets by 100%, in some markets by 200%, we still have very little inventory, and that's why we're seeing those average prices increase still every month. In the Austin market is had the biggest run up in most of the major markets in Texas. The average price last month, $599,000, up 6.5% versus what it was the same time last year. But sales in that market are down 29% versus where they were the same time last year. Inventory has gone up by about 250%. So inventory's gone from about 3,400 active listings to over 9,500 active listings. Pending sales are closest leading indicator to what closed sales will be next month, going down from 3,700 to 2,100. So that's almost cut down to about 50%. So that's what we're seeing there. And in Austin, last year, when I did this same slide, the list price to the final close price was about 106%. So if it was listed for $100,000, it sold for $106,000. In today's market, if it was listed for $100,000, it sold for $93,000. Now, to be clear, that's not to say that your deal is on the MLS, because houses on the MLS are typically at full retail value. Okay, so don't go hunting there just because it's 93%. You need it to be 70%, for example, before you see those deals there. In San Antonio, the average sales price $382,500, up 8% versus where it was the same time last year. Sales year over year were down 19%. Inventory has grown from a 1.7 month supply to a 3.2 month supply. The number of pending sales are down by over 1,000 properties, and active listings has almost doubled in San Antonio. The leases, last month they were up, but this month they're basically flat year over year, but the lease prices are up. They're up about 6%. And as soon as you guys see, some of you guys want to take a picture in here, then I'll go to Dallas. So Dallas, the average price, $484,000, up 12% versus where it was the same time last year. Closed sales were down 22%. Pending sales down 28%. So basically what that means is we'll probably see closed sales down about 28% when we close out the month of November. Leases, everyone's going to leases in the Dallas-Fort Worth market. So leases are up 20% year over year, and the lease price up 6% year over year. In the Houston market, the average price $404,000, up 7%, and closed sales were down 22.8%. Inventory has come close to doubling. It went from a 1.8 month supply to a 2.8 month supply. Pending sales down 23.4%, so we'll probably see a reduction in that same range in terms of year over year sales when we close out November. Lease listings in Houston are up 19%, the lease price up 4%, and the new lease listings, so each market reports something a little different, so that's why some of these items I don't have for each of the markets. But in the Houston market, one of the things that they look at is how many new properties for lease were put on the MLS versus the same time last year. So what you're seeing is a lot of investors and a lot of would-be sellers are saying, gosh, I was expecting to put my house on the market, have multiple offers above list price by midnight of the first day that it's on the market. So they're not seeing that now, and many of them have said, well, you know, if you can't beat them, join them, and the joining of them means putting it for lease, and again, waiting out the market cycle, right? So new lease listings are up 39% year over year. So guys, does this give you an indication of where we are in the marketplace? All right, good.